and welcome to this week's Trade of the Week on Monday, the 18th of March 2024. I've got a lot to cover. So about a month ago, we went short the S&P 500 at around 5,087, I believe, and we had a stop loss in place at 5,200. And as you can see here on the daily chart, we haven't been stopped out despite the S&P 500 continuing to rise. So that trade is still slightly underwater, but it's still valid, and the stop loss should remain in the same place as before. And then what we did, we also went long euro dollar and did so at 108.44, I believe, at the end of February. That one is still profitable. If you haven't cashed in your profit on that trade, maybe you could raise your take profit order to just below Friday's low at 108.70, thereby cashing in a small profit in case of you getting stopped out on that one. And then last week, my colleague Chris Beecham went long the US dollar versus the Canadian dollar. And you can see here he did so around the 200-day simply moving average at 134.81. And that is currently in profit. So here you could move your stop loss level to break even, making it a potentially risk-free trade. And this brings me to this week's Trade of the Week. And what I would like to do is to use the current advance we've seen in the US dollar versus the Japanese yen on the back of last week's higher than expected US CPI and PPI data, and go short the US dollar versus the Japanese yen, because after all, tomorrow we've got the Bank of Japan, and there is a 45% probability that the Bank of Japan will hike its rates for the first time since 2006. And we could potentially see the currency pair slip back down again towards the psychological 140 mark. So that's why I would like to short this currency pair. So this week's Trade of the Week is to go short dollar yen at around current levels with a stop loss above the previous record highs, around 152 yen, with a downside target of just above 140 yen.